Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 30, which is a stock, this time Amazon. For those who aren't familiar with the series, don't worry, I'll make sure to attach the entire playlist, which includes all the videos by order, in the description below. And I also attach my Telegram channel, where I forward the analysis and videos from YouTube and TradingView in case you want to get notified. So let's do it. For those who already know, we always start from the higher time frames, which we call our rejection time frames, weekly and daily, to know where we stand in the market. Are we overall bullish, bearish, or stuck inside the range? And as price approaches the lower bound, we'll be looking for buy setups. Vice versa, as price approaches the upper bound, we'll be looking for sell setups. We have three types of rejections. The first one is a typical support and resistance, where we see many failed attempts to break above it or below it. In this case, we won't have much typical support and resistance because it's a stock, so we can see that the price is trading like in the same direction for a long period of time. You usually find more support and resistance when trading Forex because it's stuck inside a big range from a long-term perspective. So you see many rejections from a certain level or area. So that's why we always go for the two remaining rejections, which are first, a non-horizontal support and resistance engulfing the overall movement, which I call the outer trend line. It can be the upward one or the lower one, of course, vice versa in case of a bearish trend. But in this case, on Amazon, we have a bullish trend. So as price approaches the lower bound or non-horizontal support, we'll be looking for buy, and the upper one is considered as a non-horizontal resistance, or what I also consider an overbought area. That's our second type. The third type is a supply and demand zone. So for example, when we have an aggressive movement upward, we've got a demand zone. It can be, for those who are not familiar with this, with supply and demand zone, you can find a video on my YouTube channel where I explained the four types of supply and demand zones. We had two types for the demand and two types for the supply. For example, for the demand zone, we have a drop, base, then a rally, so that's also a demand. And then the second type is a rally, then base, and then a rally. Anyway, don't worry, when you have an aggressive movement upward, we would have a demand area, and as price approaches this demand area again, we'll be looking for buy setups. For the supply, we'll need in parallel an aggressive movement downward. That's when you have a supply zone, and as price approaches the supply zone again, we'll be looking obviously for sell setups. Okay, so let's do just that on Amazon. First, we zoom out. We start from weekly time frame, zoomed out picture, and to get a feeling about where we are in the market. And we are obviously overall bullish, right? And you can even draw a trend line which engulfs the overall movement upward. We can see many rejections from it, and as mentioned previously, it's acting as a non-horizontal support. So as price approaches it again, chances are that the price would reject this trend line again, and we'll be looking for trend following buy setups. So that's first, and of course, as usual, we try to make an offset for it. So we drag and drop it. As you can see, the price broke it upward, so now it's no longer valid or holding the price down. So that's basically it. Then we zoom in and monitor the price action and do our market structure analysis. But before we zoom in, because we don't have typical supply and resistance, let's go for round numbers. And it depends on the case. For example, on EURUSD, it's trading between 0.5 and 3, right? So the round numbers are, let's say, 1, 2, and 3, and 0.5, 1.5, and so on. However, for Amazon, as you can see, it's trading between 500 or, of course, 0 till the 4K. So the strongest round numbers are 4K, of course, which the price hasn't reached yet. So the 4K, of course, we've got the 3K, 2K. So these are our strongest round numbers. 2K, and of course, we've got the 1K, which are around here anyway, but it's very far from the current price. So what we want to monitor for now are these two, because price is trading around it. So here's our new possible all-time high, because for now the current all-time high is around 3.8K, and price is currently sitting around the 3K. Of course, it's an entire zone, not a laser level. For example, on the 2K, as you can see, price broke it slightly upward before trading lower again. So you should treat it just like a horizontal support resistance as an entire zone like this. So for the 3K, as price is now sitting around it, you should treat it like this. Okay, so now we know where we are in the market around the 3K round number, which is acting as a potential support area. And if broken downward, then the next potential support, in this case, it's a non-horizontal support, would be around this area. So half of the work, if you notice from this video and the previous ones, half of the work is done on the weekly and daily. Once you know where we are in the market, we know what to look for on lower time frames, on H4, H1, or even M30. So now if we zoom in a little bit to monitor like the market structure analysis, we know that we were overall bullish. We had this big impulse movement, then we had a range, price broke upward for another impulse movement, and we are currently sitting inside a range, right? So just like previously, impulse, and range. When we have a range, we have two possible scenarios, either a break upward, just like this case, or we might also see a break downward for a trend reversal from bullish to bearish. Right? But of course, we need a trend reversal. We need the price to prove to us, or the bears, that they are taking over. And like, for example, breaking only one swing low is not enough. We need a break of the entire range. So for this particular case, if you zoom in, we can see that we've got a range around here that the price hasn't break in an aggressive manner yet. Instead, we've got rejections from it multiple times. So this area is still acting as a support area. And if we make an offset for our 3K to cover these previous wicks here, we can draw another one around 2.9K. Okay, let me adjust it. Here we go. So now price is around this support, a potential support area of the lower bound of this range. And of course, here's our upper bound, which is obviously the all-time high. And we also have, as mentioned from like the beginning, as we've got a supply area. And of course, this is an entire zone also. So like from 3.9K or 3.8K to around the 4K. This is an entire resistance or potential rejection area. So now we know where we are in the market. Let's zoom into daily time frame. And like when you like find many conferences or gathered many info from weekly, chances are that you won't find much on daily time frame because you already like drew and know and knew where you are in the market. So from daily time frame, you can see it like in a cleaner manner. We're around the lower bound, looking for buy setups. If this one is broken downward, then a movement to the next rejection would be expected. And we've got also, and as much at the start, of course, we can see it better from weekly time frame. We've got a demand area around this aggressive movement upward, right? So let's draw it. Here we go. So this area here is the intersection of a demand area and the lower trend line in brown acting as a non-horizontal support. So in fact, this would be a massive, which is making this area stronger because it's the intersection of two possible rejections, which you can see here. As price approaches it, of course, we'll be looking for buy setup. But for now, price is sitting around this area. And for the bears to take over, we need to see a break below it. Then we'll be looking for buy here. And of course, in this case, after this break, we'll be looking for sell on the retest of this one and then buy on the retest of the lower bound. But for now, since we're around a rejection area, a support area, which is the lower bound of the range, we'll be looking for buy setups. Now, if we zoom into H4 time frame, we can see that we were overall bullish previously, then price broke below the previous low. You can stop inside this range, then price broke below the previous low here, forming like a weird looking head and shoulders pattern, then traded lower, right? So for now, technically, we are overall bearish, and you don't want to buy a bearish market. We always wait for the buyers to prove to us that they are taking over again before we enter the buy. So we are bearish, however, around its support area, a rejection area, the one of the range. That's why we are looking, I insist on the word looking, for buy setups. Now, if we zoom in, let's try to see, or let's try to draw a trend line which engulfs the overall movement down. So for the sellers to prove, for the buyers to prove control, then we need to invalidate it or to break it upward, whatever you want to call it. Let's make it in red, right? So that's it. Now this falling trend line is engulfing the overall movement downward, and for the buyers to take over, they will need to break above this trend line. For example, I'll be waiting for a new swing high to form around the upper red trend line to consider it my trigger swing. For those who know me, I always highlight it like this as our trigger. Of course, we can't really know what might happen. This is what I would like to see so that the conditions would be met as per my trading plan and I'll be entering a buy. Of course, price might invalidate my scenario like by trading lower like this or by going upward like this. But this is what I would like to see as per my trading plan. Always follow your trading plan, back test it, and so on. Anyway, we'll talk about trading plan maybe in a different video. Okay, so if you trade it on margin, like if you trade it on spot, you can simply buy here, or if you are already buying, can add more longs. Or if you trade it on spot, on margin, you can put your stop loss below the previous swing low, which hadn't formed yet, but this is the projection. And we target at least a 1 to 2 risk to reward ratio to have an edge over the market from a, sorry about that, okay. To have an edge over the market from a risk management perspective. We already have an edge from a technical perspective around a support area. Now we're expecting this movement, right? So price is currently trading inside this big range, currently around the lower bound, looking for buy setups. Meanwhile, and until this happens, until the buyers take over by either breaking above this last high or form a new high, as I mentioned, meanwhile, would be overall bearish, because we are overall bearish from a short-term perspective, but by breaking below this area, the bearish trend would be extended from a short-term perspective to a long-term perspective. Of course, not say long-term, to a medium-term perspective, and then a movement lower would be expected, because from a long-term perspective, we are clearly overall bullish, and we are simply now in a range just like previously. It can be just an overextended range before we see a movement upwards. So we've got our bullish trend waiting for the correction phase, waiting for the buyers to take over to enter the buy again. So long story short, around the support area, looking for buy stops here. Meanwhile, while bearish, as price approaches this lower bound, we'll be looking for buy setups. That's it for Amazon. Best of luck, and I'll see you on the next one.